Hey, if you're going to play in the stock market, then you have to know which way the stocks are going. Okay, if you want to trade options, it's extremely important to understand which way the stock's going to go, because if you trade options, the value of that option is all based on where the stock moves to. So if you want to up your trading game, you come here to YouTube to solve some problems. Problem you may have is, how do I know which way the stock's going? How do I know where stocks are going to go? How do I pick the right stocks? How do I pick the right options? It's all based on where the stocks are moving to. The best way to do that is by using technical analysis, chart reading. So in this video, just like a lot of other videos I make, I'm going to show you how to use simple technical analysis skills to figure out how a stock is trending, where it most likely will go, and then you can choose your option trades based on that. All right, so let's just jump right in and start taking a look at the charts. All right, everyone, Lee Lowell here from smartoptionseller.com. It's all about looking at the stock charts. You have to figure out which way a stock's going to move. Otherwise, why are you putting your money on the line? Why would you buy or sell stocks, or why would you buy or sell options if you have no idea which way the stock is going to move? So you want to use technical analysis, chart reading to help you figure out which way the stock's going to go, and then you make your stock trade, or then you make your option trade. So let's jump right in and start looking at the charts, and I'll show you what I use, the setups that I use, and the things that I look for: chart patterns, support and resistance, technical indicators, all that good stuff. So what you see in front of you is my chart up here. This is the price action up here, and down here is the RSI indicator on the chart. So keep it very simple. I have three moving averages. I've got a 200-day moving average here. I got a 50-day and then a 20-day moving average. Those are three very common moving averages that so many people look at. And when people are looking at the same things, the same things tend to happen over time. It is true that self-fulfilling prophecy in the markets, because everyone's banking on the same things happening if they're looking at the same things. So these are three moving averages. They're all simple, not exponential, simple moving averages. Down here is the RSI. It's an oscillator. It's an overbought, oversold oscillator. It's a 14-day look back period. If you can see my mouse right here, it's based on closing prices, and it oscillates between overbought and oversold levels based on the chart price action up here. Okay, I use the 80 level and the 20 level to give me a clue whether a stock is overbought or oversold. Then hopefully the turn will come at that point. So up here, what we want to do is you want to start looking at stocks that you're interested in. Okay, you have to pick some stocks, and I go through my list day after day. That's what we do in our newsletter. We have a couple newsletters that we run at the Smart Option Seller. I'm looking at charts all day long, waiting for setups to occur, and then we jump into an options trade. So we want to look at the overall market, the broad market as a whole, before we look at any individual stocks. And this is the SPY. Okay, so this is the exchange traded fund for the S&P 500, probably the most widely traded stock. It's an ETF, widely traded stock / ETF in the market today. Okay, so you want to figure out which way the general market is moving. And as you can see, and this is about a 2-year look back period or so, the stock market has just been going up. This is based on the S&P 500. The stock market goes up over the long run. It will always go up over the long run, because the stock market is made up of profitable companies that keep pumping out profits quarter after quarter. The stock chart price has to follow. Okay, if earnings go up, stock prices are going to go up as well. So the S&P 500 is made up of profitable stocks. So it's going to keep going up in the long run. But in the short run, anything could happen. In the short run, I'm talking 1 day to a couple months out in time. Okay, you got dips, you got sideways action. So what you see on the chart, all these blue lines here, these lines here, these are hand-drawn lines that tell you which way a stock or index is trending. You want to have some visuals to help you see which way a stock is going, because then you could use those to help you determine your higher probability timing play when to get into a trade. If you want to be long the market, you draw, these are what's called channels. Okay, you draw these channels based on connecting some of the tops, some of the bottoms, and you see the price action fluctuates within the channels. So if you want to get long a stock, you wait for a pullback to the bottom of the channel, wait to see if it balances, and then you get long. If you want to be short, you wait until it hits the top of the channel, and then it sells off. Okay, so these are things that help you become more profitable over time. Now, nothing's guaranteed. There's no guarantees in the market, but using technical analysis can help you figure out which way a stock's trending. You can use them to hit some support, draw some support and resistance levels. Like up here, here's the top. This is some resistance. If it's a price that it can't get through, it's called support. So you want to learn how to draw these lines, okay? You want to learn how to spot support and resistance levels, and then you can take trades based on if and when a stock hits one of those support or resistance levels, and use the RSI to help you as well, okay? So you can see here, the RSI is close to the 80 overbought level for me, which almost coincides with the top of the SPY at that point, and then it sells off. All right, so you got some low points on the RSI here, which corresponds to low points on the stock chart as well. So you want to use these things. There's also triangle patterns. There's ascending wedges. There's bull flags. And when I pull up some individual stocks, I'll show you some of those patterns. So you want to look at charts over and over and over again and see these patterns develop. These patterns develop all the time, okay? And then once you see the pattern develop, then you can make a more informed decision on which option trade to take, okay? So what we're seeing right now in the market is the general market's just going up, okay? We hit all-time new highs here. This was, what day was this? Right here. This was January 24th, 2025. So each bar, each one of these vertical lines is 1 day's worth of trading. This is a daily chart, not a 1 minute chart, not a 5 minute chart. This is a daily chart. So each bar is 1 day's worth of trading. So right here on January 24th, hit an all-time new high again. And the market will keep going up over time. But if you're a shorter term player, you have to have better timing patterns. So what are we seeing? What do we think is going to be happening? Well, in the U.S. here, these are U.S. stocks that we look at. Just this weekend, our President Donald Trump has just put in new tariffs on China, Mexico, and Canada. So we have to wait to see how the market opens. We're probably going to see some kind of dip in the market because we know tariffs are not really sure how that's going to play out. That could be bad for businesses. It could be bad for the economy. Prices could go up. Prices on everything. So we're not sure how the market's going to react to that. But we know in the long run, things will work themselves out. And again, the market will go up. But we play in shorter time frames, so we have to be cognizant of these short-term moves. But for now, the stock market looks pretty strong. Let's just jump right into our individual stocks and see what we see. In these videos, we look at some of these more popular stocks. I can't go through all 3,000 stocks that are in the general market, but we look at some of these really popular stocks. So let's start with Microsoft. They had earnings last week. Their quarterly earnings did not come out so well. Here's where Microsoft closed on January 29th, and then here's where it opened up the next couple of days. So we had a big gap here, but you can see this triangle pattern that I drew right here. These are hand-drawn. Connect some tops, connect some bottoms. You can see the price action starts to get tighter and tighter, and this is what's called, it's gonna pop one way or the other. Okay, it's compressing. All that energy is compressing, and it's gonna blast out one direction or another. You can see it blew out to the upside here, and then it just came back down. So now it's trading right back in the range again. So for now, you can take these off, and then you can start to draw yourself some new pattern. So for right now, we can probably say that Microsoft sort of is in a range here now, going from, it's got, from 400, and this is 400 has been a pretty good support going back to, let's say back here. We can kind of extend the line. So towards the end of 2023. So the 400 area has been a pretty good support for Microsoft for a while now, okay? And it's getting trouble getting above these all-time highs here near 470. So it's kind of stuck in this channel here. So as it moves down, you want to look at your next area of 400. If it comes back down to 400 and it bounces, then you know there's probably going to be buying coming in. So you can make your play based on that. If it comes down a little bit more, bounces, then you want to get on the long side. If it rallies back up again and finds some selling up here, then you know it's probably going to sell off again. So you need to learn how to draw these patterns. I'm going to show you a couple free websites that can help you understand how to use these patterns and how to actually look for these patterns. All right. So Microsoft right now kind of stuck in that range. Let's see what else we have. Nike. We've been talking about Nike recently, so let's kind of back out here. We had this is going back to about October of 2023. Nike's sort of been in this downtrend for a long period of time here. Let me move myself over. You can see the long downtrending line that I drew, and Nike had good support right under $90 for a long period of time. Let's go out to the weekly chart here. Maybe you can see this a little better. Okay, so all-time highs here back in towards the end of 2021, and it's just been on a downtrend since. Now, you know Nike is just an incredible company, known worldwide, probably one of the best brands known around the world. But it's been in this downtrend, and using technical analysis will help you stay out of those bullish trades. Look at this. Nike just been going down since this is probably spring of 2023, just going down, down, down. And again, we have the support right around $70, and it's bumping up against the downtrending line right here this past week. So if you're looking at a weekly chart, you can see if it doesn't break out above this downtrending line, it's probably going to come back down and test this 70 level again. And will it drop through 70, or will it bounce again and try to move up above this downtrending line? So Nike, keep an eye on. Let's go back to the daily chart of Nike. Okay, so right here you can see that downtrending line. It popped above it just a little bit for 2 days here, Thursday and Friday of last week, January. That was the end of, was it January 30th and 31st, 2025. So next week, it may come back down into the triangle here and may try to assault on the 70 level, or it may get some mojo and pop up here. So keep an eye on Nike. That's some of the things that you need to look out for. Oracle was making all-time highs here, and then it had this nice move back down. And here's the 200-day moving average. Usually the last line of support for a stock, you can see if you follow back on the 200-day moving average. A stock will pretty much bounce off of that if it's a quality stock. Oracle bounced again right in the low 150s, bounced nicely. So it's got some volatility here. There's some news about they're involved in some new venture. So keep an eye on Oracle. It's a great company though. So pick your points. 200-day moving average, pretty good area for support. You can see the RSI got pretty low here on the last move down. It went up, came back down, tested it again. This was your buy point right here on the bounce right off of, or very above, the 200-day moving average. So Oracle, great company. You know it's going to go up in the long run. You got to pick your points. You got to know when to get in and make the decision to trade it. AMD, AMD, I'm not really liking it here. Here was the support line, long-term support right above 120. It's getting down below it. I don't like AMD here. I would not be a buyer here. The momentum's on the downside. The trend is your friend. It's going down. I would not try to pick bottoms here. I think there's more downside to AMD. Let's see what else. Apple, they had earnings last week. Popped up on the initial earnings. Look at this 1 day here. This is last Friday, January 31st. Big range for Apple. And here is what's called an ascending triangle, where the price action's moving up, 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 but it just can't get through this level right here. Eventually, it should break through, which it did, but it's come right back down. Here's that 200-day moving average again. So you got to pick your points. 200-day moving average on quality stocks really is a good potential buy area. RSI got pretty low down here as well. So right around 220 was a good buy in Apple. If you buy and hold, you know Apple's going to go up in the long run. So this was your buy point right here. Let's see what else we got going on. Amazon. This is what's called a bull flag. You got the long pole, the flagpole, the downtrending little bit pennant, and then it pops back up to the upside. So this is what's called a bull flag, where it makes the downtrending pennant, and once it pops above the upper edge of the pennant, it's going to keep going. Plus, it's got the 20-day moving average, 50-day moving average, 200-day moving average, all sloping upwards. The slope of the moving averages is very important as well. It tells you which way the stock is trending. So Amazon looks good for the long run on the long side. Netflix, another popular stock, just a strong stock. I mean, it's kind of hard to play this thing up here. I'd like to wait for some kind of pullback, maybe to the 20-day moving average, but it is definitely on a new trajectory here. Netflix is a strong stock. It's really hard to short this thing, but sometimes it's hard to get long this is what's called an island top up here, where it just floating up here on its own. But this may be the beginning of the next part of its ascent higher. So Netflix, it's going to be strong. You have to pick your points there for that stock. Cisco, let me see. I'm going to run through these pretty quick. So you had the sideways action here, had a nice move up, sideways action, blasted through, and pulled back down to some support at the 50-day moving average and is moving up again. So Cisco looks good for the long side. Procter & Gamble, I'm not seeing anything there. Walmart, here's a good another congestion pattern right here. Tight, and blast out to the upside. Typically, the stock will blast out in the direction from where it was coming. It was coming from moving upwards, congest for a little bit, and then continues up. If it had been moving down, congested, most likely it would continue to the downside. But Walmart, we know it's a great company. It's kind of hard to keep it down, but it had the congestion, was right on the moving averages as well, and then continued its mojo higher. Disney, not seeing too much Disney at the moment. Tesla, Tesla's going to be supported for the time being. I mean, with Elon Musk being so close to Donald Trump, it's hard to see how Tesla stock can go down at this point. So I think it's going to be supported for the next few years. From where, it's hard to say. $400 level could be the next launching point. You can draw the congestion pattern. Okay, here. It's tightening up right around $400. In my opinion, it's most likely going to break to the upside. Next assault, $450 and $500 on Tesla. Eli Lilly, I'm not seeing anything there. Bristol Myers. Could be okay for Bristol Myers. Finally got out of its slump from the downside. Here is that ascending triangle right here, blasted up to that. So, looks kind of good for Bristol Myers. BMY is the symbol. Here's you draw your channel here. So it's right at the top of the channel right now. If it can get through the low 60s, it's probably going to keep going higher. Let's see what else we have. Let's see. Merck's in a downtrend. I'm not sure I want to even touch Merck. You can see here was that descending triangle right here, descending triangle, and it blasted down. Trying to pick bottoms is a really hard thing to do. I would not touch Merck right now from the long side. Verizon, kind of just sideways, not much happening. Verizon, Costco, great company. Look at it, just beautiful uptrend, beautiful uptrend, beautiful uptrend. Here's that ascending triangle, keeps going up. Nothing else to say. It's probably going to keep going up. So pick your points. If it comes back down to one of the moving averages, that's your next higher probability timing play to get on the long side, if that's what you so desire. McDonald's, not seeing much there. Pepsi. Now, Pepsi is interesting. I've talked about Pepsi before. Let's go out to the monthly chart. Look how beautiful this was for Pepsi for such a long time. Just beautiful uptrend following along the 20-month and 50-month moving averages, but finally got into this downtrend. Got through this support here. So let's go out to the daily chart. Here was that long-term support right around 157 or so. Pepsi's down. So I would not be a buyer of Pepsi here until it gets back up at least into the high 150s and see if it wants to keep going. For now, it's in a shorter term downtrend. Not playing Pepsi from the long side. Warren Buffett, here's a Berkshire Hathaway. If you want to see the symbol, here's the symbol up here in the top left-hand corner. You can't bet against Warren Buffett, okay? So you need to buy in the dips. Where are the dips? Right around 440, right here. Down. Every time it was bought back up, okay? So you have to understand. And it coincides with the 200-day moving average. Boy, this was a beautiful buy right around 440 on Berkshire Hathaway. In a minute, I'm going to show you a report that I wrote on Warren Buffett and how to piggyback, how to ride his coattails with a different options trading strategy. I'll show that to you in a minute. Let's see. Let's quickly go through some of these others. Meta, face stock, it's strong. It's hugging along the 20-day and 50-day moving averages. Was in the channel here. Finally broke out to the upside. So all-time new highs. Looking pretty good for Meta. Maybe want to wait for a little bit of a pullback if you want to get in. The RSI's get a little overbought. It's going a little vertical here. Maybe wait for it to pull back a little, wait for the moving averages to move up, and they connect somewhere around here. That's your next higher probability timing play on Meta, IBM, strong. Here is that congestion pattern. They had their earnings come out, just blasted to the upside. Getting overbought here, though. Could be a pullback or could just be sideways action for people to catch their breath and then move on to the next leg higher. I don't know if this gap will be filled, even though it's at overbought. It could pull back a little bit to let this thing get off some steam, but it may not pull all the way back to here. But IBM, strong company. Google, I like the chart setup on Google. They have earnings coming out this week, so you got to be careful. But I like the pattern here. Google's moving up, had some resistance here, and starting to break out. So if the earnings are good, this thing's going to go. It's going to go. Trust me, it's going to keep going. So watch those earnings. If earnings are good and it pops, then you have to worry about buying on a power higher. But this thing looks good. If you want to try to front run this thing before earnings, if you really think the earnings are going to be good, this could be the time to buy. But that could be risky. If the earnings are bad, it could drop back down. So, don't put everything into it. But Google looks good to the upside for me. I like that chart pattern. Here's the triple Qs. Just like the SPY, it's been going up, having a little pullback here. We have to wait to see how the market opens this week in regards to the new tariffs that we're putting on here in the U.S. What else? Clorox, nothing. Colgate had some earnings come out. Colgate, clear downtrend. You can see that. Do not buy this thing until it moves back up again. You're going to be picking bottoms. You're going to get hurt. Don't do that. Coca-Cola, sideways action. Long term, it's a good buy. Long term for right now, it's just trading sideways. Nothing happening there. Johnson & Johnson, not much. GlaxoSmithKline down near the bottoms. Maybe have finally found itself a bottom. You can see the 20-day moving average is trying to turn up. The 50-day moving average is trying to turn up. You can see the curls right here. So Glaxo maybe finally finding its bottom. Here was the long-term support back then in like low 30s. Did find some support there if you could just imagine extending the line here, and it's finally moving up. So Glaxo could be setting up for a move finally higher. Adobe, just a tough one. We have a put spread that we sold on Adobe, but we have a lot of cushion on that. NVIDIA. So let's talk about NVIDIA. This is a chart that everyone's looking at, stock that everyone loves. Sitting right on the 200-day moving average. It has fallen down. It was a darling. This is the whole AI sector, the DeepSeek story that came out this past week that knocked all these AI companies down. That was also including AMD and Microsoft and whatever other companies are involved in that space. But NVIDIA is the big one. If it cannot hold here, it's going to drop more. If it can get its mojo, it's going to go back up. This is a make or break spot right here. I want to see where it goes next week before, claiming a position for myself and for our news readers, our newsletter readers. But right now, it's kind of teetering. It could drop more, especially if the market drops because of the whole tariff situation. NVIDIA is going to go down as well. So you got to be careful with that. Wait to see which way the market wants to move it. MicroStrategy, the whole Bitcoin thing. We've got some plays on some other Bitcoin stocks, Bitcoin-related stocks, I should say. This is MicroStrategy. Their whole portfolio is almost based entirely on Bitcoin. That they hold a ton of Bitcoin, and it's all going to be based on which way Bitcoin moves. So MicroStrategy, keep an eye on that. You can see, even though it has a congestion pattern here, it's based on the price of Bitcoin. So whichever way Bitcoin goes, MicroStrategy is going to go as well. And that's about it. Goodyear Tire could kind of trade around that $9 mark for such a long time. And lastly, Palantir, everyone's new favorite, or it's been everyone's favorite for months now. I like the pattern here. I like the setup. It's a strong stock. Moving up, you got the resistance here, this ascending triangle. If it breaks through, it's going to keep going. There's Momo behind it. There's good bullish momentum behind Palantir. It's probably going to keep going up. But we could see a little bit of a pullback, maybe to the 20-day moving average, 50-day moving average in the low to mid 70s. Keep an eye on it, but eventually it's going to get up through this mid 80 level and keep going. Okay, may have a little setback for a while just based on news and global events and all that, but you can't keep a good company down for long. All right, so if you want to get into these trades, have a longer term horizon, more than 1 week, more than 1 month, okay? Because anything could happen in those short time frames. All right, so let's take a look at some free websites here that can help you figure out how to draw these lines, how to figure out what the patterns are. All right, so let's go to let's look at our website here, smartoptionseller.com. This is what we do. We mostly sell put options and put option credit spreads. We're bullish. We take bullish trades, and those are what selling put options is all about, bullish trades. If you want to learn about what put selling is, go to our website, click on our free ebook here, Put Selling Basics. It's an ebook that I wrote all about what put selling is, why we love it so much, and why we do it. Scroll down, put your name and email address here. We'll send you an email back with a link to the book. If you want to get a deeper dive into what put selling is all about, you can click on our video series here. You can read all about it down here. And lastly, here's our services. This is actually what we do and what we offer. We have 2 newsletters. These are paid services. Our newsletters, we have our one-on-one coaching and our probability calculator. Let me show you the Warren Buffett report that I have here. This is how to, whoops, what's going on here? Let's reload that. Ride the coattails of Warren Buffett and triple your returns. This is based on an option strategy that if you want to piggyback Warren Buffett, if you're bullish on Warren Buffett, you can take a look at this option trading strategy that can triple your returns and reduce your costs up to about 70%. So that's something that you can look at. All right, let's look at some websites here. Stockcharts.com up here, stockcharts.com. You can look at free charts, but if you want to learn more about how to read charts, click on this chart school here, and you can go through this list here. Let me move out of here. You got table of contents, and you can start reading and learning about charting. The other website is chartpatterns.com. It can show you all the different patterns. You may notice some of these that were on the charts that I was showing you. Click on one of these. It'll show you the pattern, and it'll tell you about what they do. Down in the description, I have other books, easy chart reading, basic books, other links for websites and services and software and things. Read down in the description below the video here. I have all the links for things that could help you. Have a look at those. If you're looking for a broker, you can look at the broker that I use down there as well. I hope this video has been helpful for you. Make these free videos. Want to help everyone become a better trader. Leave me a comment. Please like the video. Tell your friends. Send me an email. I will always answer back. Next video on the screen here, I'm going to put up another put selling video to help you understand what it's all about. All right. That's all for today. I will see you all in the next one. This is Lee Lowell signing off.